Have you ever heard of a Tier 1 reserve asset? Well, since the end of World War II, there has only been $1 in U.S. Treasuries. It's a riskless asset that central banks all over the world have relied on for decades. But guess what? Something huge just happened. Out of nowhere, the Bank of International Settlements, which is the central banker's central bank, decided to reclassify gold as the world's only other Tier 1 asset. That's right, the world's only other Tier 1 reserve asset. Can you imagine what this means for the future of our economy and the way we live our lives? It's going to be a different existence if things play out the way that I think. Gold has always been a valuable commodity, but now it's officially on the same level as US dollars in US Treasuries. This is a big deal, people. I can't wait to see what this means for the future. Will we start to see more countries hoarding gold instead of dollars? Will this lead to a shift in power dynamics between nations? Only time will tell. But one thing is for sure, this is a game changer. So stay tuned to my channel. Have you ever wondered why the Bundesbank made a big deal about repatriating their gold? And why so many other central banks in Eastern Europe, including Germany, Austria, Hungary, Poland, and Czechoslovakia, started going on a gold buying spree 2.5 years before the Bank of International Settlements, BIS, announced that it will be reclassified as a Tier 1 asset? I mean, does it really make sense that all these banks suddenly started hoarding gold without any prior knowledge of what was to come? Or is it more likely that the BIS quietly laid out a framework of what was coming and advised their member banks to get their house in order? It seems to me that the latter is much more probable. Think about it, gold has always been a valuable commodity, but now that it's officially on the same level as US dollars in US Treasuries, it's become even more important. The BIS knew this, and they knew that their member banks needed to accumulate gold and repatriate it in order to get ready for what was coming next. So what does this all mean for us? Well, it means that we are on the cusp of a major shift in the global economy. Gold is going to have a central theme in what comes next, and those who have already started accumulating it will be ahead of the game. You see, after World War II, the Allies met in Bretton Woods, New Hampshire, and made some significant changes to the global economy. They anointed the US dollar as the world reserve currency, pegged gold to the dollar at a fixed rate of $35 per ounce, and classified dollars and treasuries as a Tier 1 reserve asset. They also formulated the International Monetary Fund, IMF, at Bretton Woods. Fast forward to today, and we're seeing countries from all over the world calling for a new Bretton Woods, a new system. The IMF itself has publicly stated this on their website. And that's not all, we're also seeing a rise of a group of reportables on the Commitment of Traders report. Now, let me explain what that is. The COMEX market is the commodity exchange here in the States that sets the worldwide price for commodities. And the exchange publishes something every week called the Commitment of Traders report. It's a report that shows the positioning of the largest traders on the exchange, typically the commercial banks and the hedge funds, also known as the specs. But recently, we're seeing a wider designation of the commercials. And that's a big deal because it indicates that there's something going on behind the scenes. The commercials are the banks, and they typically trade in large volumes. So if they're shifting their position, it means that they're preparing for something big. What could that be? Well, it could be the new Bretton Woods that everyone is talking about. It could be a new system that replaces the current one. It could be a shift towards gold as the new Tier 1 reserve asset. Over the past decade, we witnessed a trend of significant amounts of gold being withdrawn from the exchange, amounting to the official holdings of the Bank of Japan. This trend continues to this day, with central banks still accumulating gold and private traders emerging on the COMEX market. These new traders, referred to as the others, are taking physical possession of gold, which is unprecedented for central banks. There is also speculation that digital currencies, if they survive, may be pegged to gold due to its status as a Tier 1 reserve asset. All of these developments have led to the International Monetary Fund calling for a new Bretton Woods system.